I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love it. Talk crypto. From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion.
And wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Barclays lifts its guidance and launches a £500 million share buyback, but the chief executive tells Bloomberg he's not happy about its exposure to the collapse of subprime auto lender Tricolor Holdings. Bloomberg understands AI firm Anthropic and Google are in advanced talks over a cloud computing partnership, potentially worth tens of billions of dollars. Plus, Donald Trump signals uncertainty over a second meeting with Vladimir Putin, saying he does not want a wasted summit. We discuss how Europe is ramping up pressure on Moscow with Ireland's Minister for Defense and EU Affairs. Now, meanwhile, President Trump says a 155% tariff on Chinese goods will begin on November 1st unless the two nations broker a trade deal. Now, it does come, as he says, a meeting with President Xi Jinping would yield a good deal while tempering expectations. We're now joined by Anna Rosenberg, head of geopolitics at Amundi Investment Institute, and Brendan Murray, who coordinates our global trade, supply chain, and geoeconomic statecraft coverage from Bloomberg. So I have to say these are like the two busiest people in London trying to figure out our world. Brendan, what we're trying to understand is actually where the U.S. wants to focus next on trade. So there's been quite a lot of turmoil. What do we know that the Treasury Secretary and the President himself want to focus on?
Yeah, exactly. I think these next 2 weeks are probably the most consequential that we're going to see on trade policy in the second Trump term. We've got the Besant meeting in Malaysia with his Chinese counterpart. They need to de-escalate before they can put some things on the table toward a trade deal. We have the sort of on-again, off-again summit between Trump and Xi. Is it going to happen? We don't know. It sounds like it is, but then Trump says recently it may not as well. So what can a trade deal in the short term look like is a huge question. And then a week after that, we have the Supreme Court hearing on the legality of Trump's reciprocal tariffs, which could throw the whole thing, all the negotiations, the bilateral ones, the deals that are in the works with all sorts of countries. So a lot of the turbulence is behind us, but there's plenty ahead of us as well.
So, and I mean, the million-dollar question that we've been asking since Liberation Day is trade is trade actually changing diplomacy, or is diplomacy changing trade? Like, what do we know the U.S. administration wants?
Well, I think we are in a different geopolitical order, right? And it's not anymore about efficiency, it's about security. And we have seen, as a result, a lot of economic friction. And this is not new. This didn't start with the Trump administration. We've seen more protectionism, more sanctions and export controls, and that already shaped and changed global trade over the last few years, right? And so now we have a lot more economic friction, and more is likely to come. So what we're seeing now is actually an attempt by diplomacy to make up for the disruption of the old world order, if you will. And we're seeing a lot new trade negotiations happening between partners that have strategic interests in common, right? For example, the EU is talking with many different countries and regions on trade, with Mercosur, India, Indonesia. The Indians as well are having a lot of new trade discussions, right? They signed the deal with the UK, and we're having negotiations with the EU, negotiations with Brazil and Mercosur too. Everyone is trying to sign new side deals, if you will, to compensate for the global disruption. And as a result, I think trade is going to continue to flow. We're not deglobalizing, but it's changing how it is flowing.
But to you both, is this going Trump's way? Because the disruption is self-inflicted, but are they happy about it?
Well, I mean, I think Trump's way is to get reciprocity, right? He wants to reduce the trade deficit. That's what he cares about. It's not necessarily going his way. He's getting some better deals overall. But all in all, this comes at a cost, comes at a price to U.S. consumers. And I think we'll see by next year at the ballot box if this is in his interest or not.
How do you see it, Brendan? I mean, I was struck. I know you were at the IMF. I was struck by the IMF Director General saying that trade is like water, that actually even if there's a blockage, it still finds its way to where it needs to be.
Yeah, exactly. But if you look at the amount of trade that the U.S. does with the rest of the world, the three big countries are China, Canada, and Mexico. We don't have a deal with China. We're going to renegotiate USMCA over the next 6 months. And so without any clarity on those three major U.S. trading partners, then the whole trading relationship that the U.S. has really won't change fundamentally. Yes, you can sign some deals with the U.K. and the EU, and you can kind of change things on the margins, but those are the three that count the most. President Trump would say, look at the stock market. I'm winning. I must be winning. But there are a lot of small businesses that are getting crushed by these tariffs. The number that I saw yesterday from a center-right think tank was $85 billion a year. That's $233 million a day just in the direct tariff costs, not the extra manpower it takes, the extra hours to comply and all that. So it's helping big companies. At least that's the way the market sees it. But it's really crushing the little guy.
And how's Europe doing? Again, Europe